for more on housing, we're joined by Patrick Newport. He's a housing economist at IHS Global Insight and a member of the Bloomberg Best Economic Forecasting team at his firm. He's joining us from Lexington, Massachusetts. Patrick, thanks for being with us. We have a lot, obviously, to talk about with these housing numbers. There's been so much discussion of where we are in the cycle. Are we at the bottom? How long are we going to stay at the bottom? What do these numbers today tell you?
Well, the numbers are telling us that we're still at the bottom. We've been at the bottom for the last 24 months, and the permits numbers, which are forward-looking, are telling us that we're probably going to remain at the bottom for at least another couple of months.
Is that just as we work off this inventory? I mean, what are the things that continue to hold us back? Is the jobs report slow recovery, or jobs data, I should say, the slow recovery there? Is that really one of the biggest hampering factors?
There are a lot of things, but I don't think it's jobs or the economy. The economy's been growing for a year and a half. We've added 1.5 million jobs over the past 13 months. I think that it's a combination of builders' profit margins being squeezed by falling house prices and rising commodity prices, and the fact that builders and borrowers are having trouble getting credit to buy homes.
And do you think that is changing at all, that credit is loosening?
There's no signs that credit is loosening for the people who want to buy, who are people who want to sell homes. Credit is loosening across the economy, but not for small businesses. Commercial banks are the institutions that tend to make these loans, and there's still a lot of commercial banks that have deep troubles with their balance sheets, a lot of failures still in the pipeline. So I think that's maybe the key source, the key reason that housing starts are depressed nationally and in nearly every state.
Now, at the same time, we're hearing news that a lot of folks are opting not to buy and instead to rent. And as you're seeing the trends in terms of credit and other trends that are putting pressure on the housing market, I mean, how quickly is that going to be able to turn around? In other words, if I've now decided that I'm going to be a renter, that I'm not necessarily going to go out there and try and buy a house, how quickly am I going to be able to change my decision if I'm in a lease, for example, to go out and get into the housing market?
Well, it's a matter, if you own a house, it's a matter of you selling your home. That change in trend is not going to have much of a change in housing starts. It's simply going to shift the composition towards building more rental units and fewer single-family homes. But we're seeing that trend right now, and I think it's going to be the most significant trend that we're going to see in housing over the next 5 to 10 years. We're going to see a significant drop in the home ownership rate, and it's already dropped significantly in the past 3 years.
Patrick, we were talking about the implication of all these jobs numbers. What about the inventory situation, where you still have a number of foreclosures that are likely to happen this year? You have this so-called shadow inventory. And does that mean that when you have permits going up and housing construction going up, is that necessarily a good thing?
Well, at this point, I think it is a good thing to have permits go up. Basically, we need to build about underlying demand for homes is a big number. It's about 1.5 million, and right now we're putting up 600,000. So as long as we build under 1.5 billion, we're helping reduce the inventory. So the fact that permits and starts are so low means that the inventory number will come down much quicker than they otherwise would. So I think it's a good thing to have it growing, even though it's a good thing that it's growing. And it's a good thing for the housing market.
I think I need a little economics lesson on this, I have to say, Patrick, because if the demand is that size, the construction is a certain size, obviously you also have existing home sales, but wouldn't that mean that prices would start to be working up if the demand was outstripping the supply in that fashion?
It's not the demand is outstripping supply. It's the fact that supply is that there's still a housing glut, and as long as there's a housing glut, that will drive housing prices down. In addition to that, you have foreclosures, which are also driving prices down. We don't have excess demand for homes right now. I think demand is still relatively weak, and that's contributing to the downward direction of housing prices. What will drive housing starts up eventually is demographic demand. The fact that the population grows by about 3 million a year, the population 16 and over grows by 2.5 million every year. These people have to live somewhere, or we're going to live in more congested homes. But that's the driving force that's ultimately going to bring us out of this housing recession.
Now, also, I saw another economist note today that talked about California in particular, that California, obviously, as such a big state and a big source of a lot of the subprime issues, that it's very important that California needs to come back in order for the overall housing numbers to start to show more improvement. What's the status of California?
Well, the status of California is similar to the status of just about every state, and that is that housing construction permits collapsed a couple of years ago and have basically been flat nationally and in just about every state in the country, including California, ever since then. So California is different from other states in the sense that they have a lot of foreclosures, there's still a big housing glut, but we're also seeing some pockets of California where housing prices are growing. So it's a big state, but in some sense, other than having a lot of foreclosures, it's not that different from other states, at least as far as housing construction is concerned.
Patrick, in your mind, what is the most important catalyst you're looking for quickly that's going to turn things around? What's the one sort of data point you're waiting for?
Well, the data point is actually the data point all along has been employment growth, but so far we're creating a lot of jobs. We're not creating a lot of new homes. So I think that the other thing that needs to change is we have to have more credit flowing to builders, and we have to in the short run, make it easier for home buyers to buy homes. And I think the main thing is that builders are just having trouble financing construction.
Patrick, thank you so much for your time. Patrick Newport is a housing economist at IHS Global.